The start of the golden age could be the biggest trap we have seen in our lifetime, and this has happened before. Trump is forcing Jerome Powell to cut interest rates. Guys, what I found in the chart is really crazy, and we've already been through this when we were kids. Let's jump straight into it. Guys, we are going to have a look at this specific chart, but you'll need, of course, a little bit background information because we have all these drawings right here, but it's super interesting, guys. So before we are jumping into the content, make sure to leave a thumbs up, and if you are new to the channel, make sure to subscribe because we are going to follow this scenario right here on the channel, and it looks pretty plausible that we are going to repeat something that we have seen in the year 1998, 1999 and 2000, and this was also with the adoption of a new technology, which is the internet. And this time we have the adoption of a new technology, which is blockchain technology, but artificial intelligence, you can also throw it under there. We are in a revolution right now, and this playbook, guys, has been going on for many times, but this is just looking so significant. So guys, let me first explain to you which chart we have in front of us. So this is the S&P 500 divided by the American M2 money supply. So what do you get when you see this chart? You basically get the purchasing power of the S&P 500. So for example, if the S&P 500 goes up in value, but the amount of money that is being printed also goes up, then it means that the purchasing power maybe doesn't go that much up. You know what I mean? So when you look at the normal S&P 500, we are always at new all-time highs, right? But if you take into consideration the newly generated money, then we have not been in new all-time highs. We actually see some significant, it's crazy how the support and resistance levels are holding very good in this chart, because we have here some support that is acting right here as resistance. Right, we right now get rejected at the same level we got rejected in June 1998. Then we had a massive drop. But okay, guys, we're going to I have to slowly introduce this because I want to explain to you how I basically got to this chart. First of all, I'm already looking at this chart for quite a while, S&P 500 divided by the money supply, and I already say for quite a while that we are in the illusion of a bull market, in the sense of that we are creating new all-time highs. We are definitely in a bullish market over the past coming years, because even divided by the money supply, the S&P 500 is going up. Now you have this triangle formation right here, right? The line up and a line down, line up and a line down. What is this? Well, you probably know what this is, guys. It is the banner cycle. This is what I have been talking about in my previous videos as well. So from 1996 to 1999, we should have good prices. We should have a good market, right? And then from 1999 to 2005, the market should go down. This is what Ben is predicting, and this is pretty accurate prediction normally. So it also predicts that from 2023 to 2026, markets will go up, right? 2026 to 2032, it will go down, and that's especially where we have to prepare ourselves from, because when we go down 2026 to 2032, then if you don't have anything, you will lose a lot of leverage against, for example, the introduction of Mark of the Beast. Or we all know where we're going with this world, right? We all know we're going into a direction that we don't want, where we are seeing AI merging with people, basically. Human transhumanism agenda, you can call it like that. At least we are going into a direction where we all can see that we don't really like this. And also in previous years, like in the previous time we have seen this happening, it also ended, this top ended with a blast, ended with a war. That was the war in the Middle East, right? With 9/11 basically happening right around this time. So these white lines are from the banner cycle. So this was predicting good times until 1999. As you can see right here, it went a little bit longer, and then bad times until 2005. Went a little bit longer into bad times, but maybe this was already a new banner cycle. We can actually have a look at that. So then we have until 2000, like I said, it was a new banner cycle. So 2005 to 2007, prices go up again. Well, that's exactly what you see right here. 2005 to 2007, prices go up again. And then it goes down until 2012. So then we can see that until 2012 it goes down. Well, of course, we had this waterfall first, small bounce, then we go down again. You can see the significance of this macro way of looking at the charts from Banner. And you know what's the crazy thing, guys? You know what Banner is using also? That's what I found out myself, because I have been using that for analysis, is the Sunspot cycle, solar cycles. That is also lining up right now with peak market activity. Right now we should be in the peak market activity, and let's go now through the scenario we have seen in the year 2000, and then we go to the scenario that we could see in today's society. And I'm going to bring momentum indicators there. I'm going to bring the interest rates there because it is very interesting. And guys, that we are not looking at crypto charts in today's video, this has everything to do with crypto. This chart let us know when we can see speculation, what the Fed is going to do. And like I said in the intro, Trump is forcing Jerome Powell to cut interest rates. And I definitely think that he got to cut interest rates pretty soon if he doesn't want the markets to completely collapse. So it's pretty brutal of Trump to force him like this. And like, I don't want to jump too much into that story, because we never know from the outside world. We don't know whether that is a plan, whether we are being manipulated, or whether this is a strategic tactic. I'll leave that in the middle. But the resemblance of what we are seeing right now with what we are seeing back in 1990, 1998, 99 is just very interesting. So we can actually already see that we come from a low, and this is already funny. We come from a low here in 82, right? And we start accelerating in 94, 95. That's roughly 12 to 13 years. Here we have a low, 2008. We start accelerating in 21. That's also, 12 to 13 years. So you can see this lead-in phase right here is already pretty similar as the lead-in phase right here. And we can see we have pump, dump, grind up, high levels, bigger dump. So here we have pump, dump, grind up, high levels, bigger dump, or maybe this is the bigger dump. We grind a little bit up until we reach this plateau, and then we just take off. That is. It looks pretty similar. This price action right here, especially in terms of timing, looks pretty similar to what we have seen right here. Then we are taking off, and we're going into this. And this is, guys, this is really a macro price behavior, right? I mean, what I've just shared with you from the low till the acceleration is 12 to 13 years. So that's not your average, like, I think next year is going to go down, or you know what I mean? So this is like a macro, that's why it's so significant. Then we are going into this acceleration, and even this looks pretty similar, right? Go up, like some corrections along the way, and then we have this sideways channel. We actually had some rejections from this resistance, and the moment we broke above this resistance, we actually had a very nice push. But this happened in 1998, July 2. So we pushed to the resistance. We basically pushed. Maybe we can even put it a little bit lower right here. Yeah, we pushed to this resistance level, and then we just dropped. We dropped all the way down to this support level. That was a drop of 21 to 22%. Right now we are roughly at 70%. So it is possible, if we would replicate what we have seen in the history, that we are still going to drop lower. That would of course be bad for Bitcoin, bad for altcoins, if you ask me. And maybe that could coincide with like a bigger flash crash. I don't know, maybe some systems are going to flashing some red lights. Pure speculation this, but based on what we have seen in 1998, we could see lower levels. right now with the stock market, and I would assume that the stock market will drag the other markets down with it as well. But what happens after that, guys? What happens after that is, back then, policymakers were panicking. Federal Reserve was cutting interest rates at these levels. I can show you. So here we had the interest rates, and the moment we are coming down, you can see the interest rates are being cut right here. And that's the moment that we are going to get that last push up. That is the blow off top. That was the dot-com mania. This was basically where every internet company that had a website would go up in value. And that lasted some time, and then we just entered in this massive bear market. And I think this can happen right now as well, due to multiple reasons. And this is a lot of speculation that I'm going to share with you guys. But first of all, look at the top that we are seeing right here, and look at this top. Like, of course, there also needs to be exit liquidity. Right? If you want to bring the markets to a certain extreme, there needs to be exit liquidity. And right now, there has not been exit liquidity. Right? So this structure, this is really, in hindsight, of course, a distribution structure, but a lot of things could be distributed in this area before the bear market started. That's not really happening yet right now. That time we didn't have. If we look at the momentum indicators, guys, this is also really funny. We had here kind of like these bearish divergences building up. Then we had this drop with a huge drop in momentum. That's the same thing we are seeing right now. And only difference right now is a little bit that we were already cutting interest rates in these periods. So the interest rates have already been cut in these periods. Here, Europe is even cutting more than the United States. But right now, after this drop, most likely Jerome is being forced to cut more interest rates, which eventually could be a positive catalyst for the markets, for the price to go up, right here, to go up and to reach the similar levels as we did in the dot-com boom, guys. And that, I believe, will be the top of this cycle. And then we are going to see most likely a bear market. I don't believe that the next years ahead, if we really look ahead, we look in the next 5 to 6 years, to avoid a bear market, I think is going to be very difficult. And but I also think it is very difficult to avoid a moment where we are going to see extreme euphoria, and we have not yet seen that extreme euphoria, especially not in crypto. That what makes me doubt it as well, actually, but especially not in crypto, which also is an asset class which eventually would go to a certain extreme. So yeah, guys, this is I find this very interesting because that banner cycle has just been very accurate in the past. And could it possible that we have actually been topping right now already? Yes, that is a possibility. If we were to break below this level, then I would definitely say, okay, this is definitely very bad for the markets, and the structure is starting to look different. But guys, I find it very interesting, and I think no one is actually looking at this chart. And this might really give us a benefit if we are going to see this playing out, that we can prepare accordingly. So that means basically that we still can drop to lower levels right now in the short-term time frame. We have maybe a span of a couple of months even. So this was stopping in July 98. Pretty close to the season that we are right now, and then we drop to the lows until August. So we have July, August, and then in October we had another test of that support. So that was probably the moment everyone started to freak out, and then from that second test we just bounced and we went to higher levels. But take in mind from that you can see that already from that second touch, interest rates were being cut. So the next Federal Reserve meeting is in July, of course, right? So we can speculate a little bit that maybe we see still this thing going to lower levels, small bounce, then we have a second drop in July, especially around that time when Jerome is going to announce the new policy for interest rates. That will be the moment interest rates are being cut. Then from July we can see the start of this kind of V-shaped recovery, going into the last phase of the cycle, into the blow off top, which will happen probably then by the end of this year or the first half of 2026. Maybe in the craziest part, in the last half of 2026 is also possible, because the banner cycle points to 2026. It is possible. We did that with the dot-com bubble as well. We went up from September 98. Then we came into this range roughly on March 99. So you can see already, like, it took some time. This is a macro chart. And then we spent from March, April 99 till September the year 2000, we spent in these levels above. And guys, I can tell you already right now, spending in these levels above was the mania. That was the mania. Everything was going up. News was talking about it. There were a lot of things happening. So if we would see something like this, it would really coincide with the narrative of the golden age narrative. So guys, this is the scenario that I'm watching. That means that we could still have a more delayed altcoin season. It doesn't really matter. What matters is your future perspective. And if you can hold through certain storms, if you can position yourself and you have patience, you probably get stronger out of it. But this will help us knowing where to take profits, where to exit the markets, where to prepare for what is going to come, which is a very difficult time. Maybe something similar as a Great Depression. Maybe it's going to be even a worse correction as this. Maybe it's going to be similar. Maybe we are just anticipating worse times. But this correction, guys, is going to have a lot of leverage on you, because when it's not going good in the world, and when the countries all have money problems, that if you don't have any money, you are often forced into things. You never have to do that, of course. You can always stick to yourself, which I would recommend. But when you are financially free, you have more freedom, of course, to make your own decisions and to move across the planet as a global citizen and so forth. Things that I'm saying many times. Okay, guys, that was it for today's video. I want to thank you all for watching. If you like this video, make sure to leave a thumbs up. Subscribe if you are new to the channel. If you are interested in short-term trading, and that's definitely not for everyone, I'm recommending 4 exchanges that I have a link to down below in the description. If you join using that specific affiliate link, you will get a benefit for joining that certain exchange. I will get a part of the fees, so you're supporting with the channel with that as well. Thank you very much for that. And yeah, guys, I want to wish every single one of you a beautiful day today, and I hope to see every single one of you in the next video. Bye-bye.